Okay, our update on uranium here. We'll use CCJ as our proxy, but then we'll also look at some other uranium names, just a little smattering really quickly. But we'll start with the CCJ and we'll focus there. So today was day 18. We had a big gap up, right? So yeah, not a huge gap, but big candle, nice follow through. Ironically, last daily cycle topped out on day 18, and we had the big decline, which almost made a new low below the last daily cycle, but really just kind of couldn't make a new low, which is really a positive sign, right? We kind of bounced around here for a long time, so that's positive in that sense, right? And so, is this going to be the top for our daily cycle this time? I don't know. It seems like you could see a world where we do test this level, which is 28, which corresponds with our monthly level, and we'll look at that on the monthly chart. And if we look at the weekly, this is week 11. In the last video, I talked about the idea that this looked like a bear flag, right? So you had this big decline, you had this failed rally, so we topped out on week 4. We had this big decline. Again, this is multiple time frame analysis. That daily chart, this is just your weekly version, same price action, right? We did not make that new low. Instead, we just kind of chopped around, which is what you saw on the daily chart. That's what all this is, 6 weeks of chopping around. But instead of making a new low, dumping, we're instead now, this is a failed bear flag, as I said. What like that's one of your possibilities, and that's an important thing to understand. In the same way that you have failed bull flags too, we have a pretty epic failed bull flag on in the SP 500, and I guess technically the QQQ as well. After like 6 days of consolidation, it just kind of spilled over, and so this is doing kind of the opposite. And this again is your $28 level, right? That's your big level that you looked at on the daily chart, and on the monthly, same idea. That's your big sort of. I'll zoom in here. Your big sort of swing high, which is below this major swing high, which is your recent local top. So now it's a question of are we able to get a move above 28, specifically 28, 23, and can we stay above there to create that monthly swing low and get sustained action and demonstrate that month 25 was not the top of the 36-month cycle, the 3-year cycle? We'll have to see that. That's really what we're going to be looking for. And this would be week 11. So this is an interesting kind of situation, right? So so here's a possibility that instead of this being your weekly cycle low here on week 15, right, that this is actually your weekly cycle low on week 20, right? So this would be 16, 17, 18, 19, 20. Now this didn't make a new low, but this becomes your, triangle consolidation where you end up with your low, you're making higher lows, which is actually quite bullish because this would be your next higher low, right? Instead of coming down and making a low, even just coming to retest this, you make another higher low. So this is your low, higher low, another higher low. So that's really interesting. Again, same pattern that we're seeing in crypto so far. We have to see if that holds, obviously, but that's important to kind of be aware of. And so if we look at the smattering of other uranium names, this is actually your really big picture chart. This is your yearly candles. So each candle here is an entire year of price action, 12 months all rolled into one. So the current candle is obviously not closed. It's, the July candle isn't even closed. So this is, 6 full months plus most of the 7th month, July. But you can see the general sort of trend. This is your uranium ETF. I mean, look at that. Massive downtrend over the last, since like 2011 when we have our major secular top. And so these other names, so this is your CCJ, where we've had a big run off the bottom. This is your Paladin Energy, another big run off the bottom, but still quite a bit of room to run. You could see a move to 750. So this is an example of one where that looks like a lot of upside, right? That risk reward is actually pretty compelling, right? We have an inside year right now. Right, let me actually zoom into that one. So yeah, this is actually pretty compelling. So you come all the way down here. I mean, this is really long term, right? You have this long decline. that does not make a new low, does not make a new low below here. We're able to resist that, consolidates for literally a few years. Then we have a big bullish outside year, follow through in 2021. And so far we're consolidating, but importantly, the higher end of the range, right? And our low on the year seems to be in the that adds all the other elements to this. So I will, all right, I can. So I think that low looks to be around the sort of, what is that? 45 cents ish area, maybe 50 cents. So quite a bit lower in terms of percentages, but in terms of chart structure, this is definitely your emerging uptrend, right? Like you made this big downdraft and you have a high, low. So this is your lower low, sweeps your lows. This, and if you're thinking like long term, this could become your higher low, and then you make a move higher in 2023. That's why I always say you don't have to chase these things. Think big picture, long term. I mean, look at this long run for 4 years. Like, did you have to get in here? Not really. Did you have to get in here? Not really. How about here? Not really. Like, it's okay to miss a little bit of upside to get a better, risk adjusted return for sure. So that's an interesting one, Paladin. Next gen looks hella bullish. I mean, look at this. That is an uptrend, right? This is a textbook uptrend. And I mean, again, this is on the highest of time frames. Higher high, higher low. Higher high. This is just consolidation right now. So that's an interesting one. This is your UEC, more of a sort of sideways thing for the last 13, 14 years. Denison, big time downtrend, but it's perked up the last 3 years. This year is a big inside year. So you have to be prepared for the idea that this year is a big nothing burger, right? Like best case scenario, maybe let's say for Denison, the low last year is 62 cents, right? So you're actually just kind of hoping you don't break that low, just kind of survive as an inside year this year. The high last year was $2.14. So that would still be a pretty big move from here. We're at 120. But if you can just survive as an inside year this year, maybe next year we make that move higher, right? This is just your consolidation. Because this is a big move off the bottom, right? And so I think patience is warranted potentially. But to me, that means not necessarily jumping in. You can just set your chart, your signals. Literally, you can just set a signal. Okay, I'm going to jump in when it moves above that level. I can literally just set this alert, and I will get the notification when it crosses above that. And again, there are thousands of things one can invest in, so you don't have to catch every alert. But the idea is that you can set the ones that are important and sort of meaningful in terms of the actual price action and what you might expect. And so again, I think this is a really helpful way to kind of look just kind of big picture. And this was, again, CCJ, which we've been looking at. Kind of similar to sort of Paladin, but I'd say the most bullish of all these is Next Gen. Actually, GoVX doesn't look too bad. I mean, it's so little price action. Let's change this to 3 months and see. Right, that looks pretty. We have this kind of ugly mess, and then we've made this big move up. I mean, this is a pretty bearish situation, a bearish outside quarter. That's not looking so great. But then you have this condition that's a potentially, fake breakdown on the quarterly level. This is where this gives you the optionality. You just have to know the levels, right? If we break below this level, below here, which is 17 cents, well, that's trouble, right? But then that gives you a lot of good risk reward up to 40 cents, right? And this is technically still an uptrend. You could think of this as a rising bearish wedge that just got curb stomped by this thing. But this could just essentially be a form of consolidation, and this is your sort of next move up. Again, thinking about the context of a 3-year cycle, you could see a world where we chop around just kind of in this range, and then we get our burst higher sort of later on. So really interesting things to watch.